Overall, it is a terrible day out there in the stock market. The major indices are all down drastically. We'll look at the exact numbers here in a second. As the conflict in Ukraine and Russia rages on, there's one country that's just kind of taking its step back and assessing the situation, not really taking sides at all, and that's China. And there's one company in China that has been hit extremely hard that may be the cheapest company in the world right now. So stick around. Hey guys, welcome back. I'm Richard Allen with TipRanks TV. Thank you so much for joining me for another video. In this video, we're going to touch on the conflict in Ukraine that continues to rage on and the impact it's having on the major indices here in the US, because the major indices are all down drastically. We'll look at exact numbers here in a second. But there's one company, and you probably already figured it out. It's a Chinese company, massive company, Alibaba. This company may be trading at the cheapest it's ever been right now. And many people are afraid to own this company because of different things that China has done in terms of regulating this company over the past several years. But I'm going to dig into the exact things that China has done regarding this company, and it may give you a different light for the situation with Alibaba. So ticker symbol BABA will be the main focus of this video. But let's jump over to TipRanks.com, take a peek at the major indices today here in the US. The S&P 500 down 1.73%, the Dow Jones down 1.56%, and the NASDAQ faring the worst of them all, down almost 2% so far on the day. Bitcoin also down 4%. If you take a peek at Ethereum as well, down almost 6% on the day. And then BABA, the main focus of the day, is down 1.8% on the day, almost 2% today. But we're going to take a peek at these forecasts. I'm going to try to focus on the 5-star analyst giving price targets for Alibaba. But why is Alibaba the cheapest company in the world? It really is Chinese regulation that is spooking US investors. And I'm going to show you different metrics here that of valuing Alibaba that may give you some different insights, and then different things that China's done over this last several year or two that has really spooked investors, because Alibaba stock is trading well off of its highs set back in 2020 of about $300 per share. In fact, it's down right around 60% over the past year, trading, like you just saw, right around $100 per share. The three main things that China has done to regulate Alibaba are as follows. They've intervened on merchant exclusivity, they've intervened on payments exclusivity, and they've intervened on network exclusivity. But what they've done in the process is they've made platforms more competitive, they've made payment systems more competitive, and they made networks more interoperable and more competitive. Now, the thing that seems to scare investors the most about China is that China can essentially do whatever they want in terms of regulation. They don't have to go through all the bureaucracy that we have to deal with here in the US when regulating a tech company or dealing with antitrust laws and things like that. They can just say, look, you're too big, we're going to fix it. And they've done that with Alibaba. But that hasn't put too much of a damper on Alibaba's ability to bring in profit and make money from the growing population. If you don't know what Alibaba does, think of Amazon, but China. They're a massive e-commerce player. They do things like web services, and they have a massive payments platform as well. Here's the general thesis for how Alibaba is really undervalued right now. The stock trades for about 12 times projected earnings per share in its March 2023 fiscal year, says JP Morgan analyst Alex Yeo, who is bullish on the stock. He wrote recently that net cash and equity investments at Alibaba total about $44 per share, or more than 40% of its current stock price. By his math, investors effectively get Alibaba's e-commerce business for free when factoring cash and investments and its cloud computing operations. So let me know down in the comments if this changes your mind about Alibaba or any other Chinese stock. I really want to focus on Alibaba here down in the comments, but it seems like every time I make a video about a Chinese stock, there are some comments down there that should suggest that you would never invest in a Chinese company because of regulation. But I don't feel like what China has done in this situation is irrational. And maybe you disagree with me. Let me know down in the comments. Are you bullish on Alibaba? Are you bullish on any Chinese stocks? Let me know down in the comments. I would absolutely love to hear from you. But now that we have all that information out of the way, let's jump over to what the analysts have to say about Alibaba. So overall, Alibaba is a strong buy based on 23 ratings with an average upside of almost 80%. But let's just take a peek at the 5-star analyst here from the Wall Street community. We have Aaron Kessler giving this a $200 price target with an almost 100% upside. We have Jason Helfstein from Oppenheimer giving this a $300 price target with an almost 200% upside. We have Yusuf Squally from Trust Financial giving this a $180 price target, almost 80% upside. We have 130% upside, 57% upside, 32% upside, 81% upside, and on and on and on from 5-star analysts giving this a massive, massive upside for Alibaba. Now, as of recording this video, Alibaba just dropped below $100 per share, trading now 2.5% down on the day. Let me know how you feel about Alibaba. Let me know how you feel about any other stocks out there that you're excited about. You guys did a fantastic job letting me know yesterday what stocks you were excited about. Guys, thank you so much for joining me for another video. Stay calm. Don't panic out there, please. If you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.